There's a case to be made, according to our guest, that Canada's assets are shining through global uncertainty. We are, of course, into a volatile era for financial markets. We're joined by Tiago Figueiredo. He is macro strategist at Desjardins. Tiago, great to see you. Thank you very much for joining us once again. So you say there's an allure to Canadian assets, something special about them. What do you mean?
Yeah, of course. Thanks for having me again. And I think the important thing to remember here is that the markets are always climbing this wall of worry.
Hmm.
And when you look at the composition of what investors are concerned about, Canadian assets seem to actually offer a lot there. One of the big ones that the people have been flagging is this concern about deficit spending. And when you look at Canada, the important thing here is that the starting point for any initial deficit is actually in favor of Canada. At the deficit as a share of GDP in Canada, we're the lowest across the G7. When you look at the distribution of the debt outstanding, when you look at kind of do we have a lot of bonds that are longer duration? Again, we're roughly in line with other jurisdictions. So I think the idea there is, from a fixed income perspective, Canada stands to benefit a lot from these concerns from global deficit spending. And then on the equity side, you also have this idea that, in a world where you've got inflation concerns, you have a lot of policy uncertainty, potential fracturing of what's been a structural trade with structural global trade. Gold tends to do fairly well in those environments. And again, when you look at the TSX, where we have more exposure to these hard assets that offer more diversification benefits than what you would typically get in other jurisdictions.
Andrew Coyne, one of my favorite financial columnists in the Globe and Mail, arguing, how bad is our government debt situation? It's not as bad as the 1990s, but we do have to worry. I mean, we're still running big deficits.
Yeah, and I think again, this is where you kind of have to put things relative to other jurisdictions. Yes, we know the deficits will probably be higher than initially believed, but again, the idea is that this is a story. This is a global story,
Hmm.
and the starting point matters a lot here. Even when we look at what's been driving Canadian yields or keeping Canadian yields from falling further, particularly on the long end, you can kind of tell that most of that is actually a global story. It's not necessarily these concerns around the domestic fiscal picture. There are concerns, but they're not really feeding their way into financial markets in the way that you would typically see.
What about our dollar, though, near its lowest in 4 months against the US dollar? Now, of course, often that's just driven by moves in the US dollar, but our currency has been a laggard this year versus its global rivals.
It has, and I think a big story from that point is simply that there was a lot of tensions between Canada and the U.S. at the start of the year. There was also some concerns around. The Bank of Canada had been cutting rates for a long time. They had been on pause throughout the summer, but more recently, now we're seeing more weakness in the economic data, and that's leading to a more recent bout of Canadian dollar weakness. I do think that there's scope for the Canadian dollar to appreciate from here, but I think the risks are skewed to the downside there, in the sense the Canadian dollar could weaken further. Really, the key factor there is what happens in the U.S. Right now, the markets are pricing almost what seems like the most amount of easing you could get absent a recession, and there's maybe some scope for the Fed to deliver what the markets but from there, I think that there's still some scope for the Canadian dollar to appreciate from here.
What about the Canadian banks? I know I don't think you can get into individual stocks, but maybe we could put up the TSX banking index. Do you think global investors see the Canadian banks as a pretty safe asset?
Yeah, I do. I do think that there were some concerns around the mortgage renewal cycle this time around, just given how most of the mortgages that we have are on 5-year terms, and particularly this unique product to Canada, which is this fixed rate variable mortgage, which by its design, when you have these large moves in interest rates, lead to much larger payment shocks. There was maybe some stability concerns there, but it was nothing that we were that we put that much weight on. I think overall the Canadian financial system is very resilient, and it's something that, when comparing to the U.S. or other jurisdictions, Canada also shines.
Leave us with a final thought. The AI inflation of stocks, the euphoria, hundreds of billions of dollars to be spent on AI infrastructure in America. Does it ever strike you as overdone, broadly speaking?
It's definitely a risk, and I think this is something that's kind of spooked markets earlier on in the year when you got the deep seek scare earlier on.
Yeah.
I think there's still some vulnerabilities there, but again, it's one of those where it's very difficult to underweight U.S. assets. Like the growth that we've seen in the tech stocks, like you just don't get that in other jurisdictions. And although we're seeing other indices outperform this year, and maybe it's helping facilitate some rotation away from the U.S. I think you to see an outright selling of U.S. assets and moving into other jurisdictions, it gets to be it's a pretty difficult decision to make, just given the historical performance.
Tiago, thank you very much.
Of course.
Tiago Figueiredo is a macro strategist at Desjardins.